All right, here we go. Welcome to Coffee with Marcus and Mark, and Happy New Year. This is the first show. It is the most popular stock market update show on Spotify and one of the most popular on YouTube. So we are back. I'm back in Austin. You're back. You never left, Mark. Anyhow, so super excited. So we wrapped up 2022, and it was one of the worst years. I mean, we haven't had a bad year like this since 2008, since the financial crisis. So, what can we expect here in 2023? And today, on the first trading day of 2023, how exactly are we trading the markets? That's what we're going to talk about today. If this is your first time here, I'm Markus Heitkoetter. This is my head coach, Markus, and we are real traders who trade real money on live accounts. And so, therefore, we know what we are talking about. We look at the markets every day. And if you're looking for some honest insights into the fascinating world of trading, you are in the right place. So, with that said, it's good to be back, Mark. We took a week off last week because it was anyhow a short week, not too much going on, right?
Yeah, and actually the markets didn't do a whole lot at all last week. So good week to spend a little extra time with the family. S&P down 0.1% for the week. So with that, snookered between the Christmas holiday and New Year's, it was a quiet week.
Yeah, it was a super quiet week, so therefore we took off. Not a whole lot going on, and then today, New Year, and I mean, last year was just brutal. If you look at last year's performance for the S&P, where do we have it? I think I had it up for the year. We were down, yeah, almost
19.4.
20% in the S&P. The Dow actually holding in pretty well. The Dow actually only down 8.7%. So that's not as bad. But the Nasdaq got hammered, down 33%, almost 34%. Worst performance since 2008.
Yeah, just in general, worst performance since 2008, snapping a 3-year win streak. So it was a pretty nasty year.
Yeah. Well, and of course, we need to take a look at the S&P and our bet. Because I said that by the end of the year, we will be down single digits in the S&P. And this means that the S&P would have to climb to 4,200. Obviously, this has not happened. We were down double digits. I mean, I said almost 20%. So you took the other side of the bet. Two of our mastermind members took the other side of the bet. I owe you steaks. What steaks would you like to have?
Tomahawks sound good. You mentioned that when you thought you were winning, so I think that might be the way to go.
All right,
or
all right.
just
I'll have
easy.
some tomahawks. I'll order them today, have them sent your way, and they should arrive in the next few days. So,
Or
before we look at our positions, Mark, what
hey,
can we
Marcus.
expect? What can we expect this week? What can we expect this quarter?
Hey, just real quick,
Yes.
I'll leave it up to you. But I would also, in lieu of sending me steaks, take a tomahawk when we're in Cancun for our mastermind live boardroom.
Ooh, we could do this.
So
Deal.
I'll leave it up to you. But last time we were in Cancun, really enjoyed that tomahawk at the place we were staying. And so anyway, yes, and it was a good bet, Marcus. You were in the running for a good couple of weeks there, and then just a little bit of a fizzle towards the end.
Markets fell apart. So this is where we have been talking about the Santa Claus rally. I mean, technically, today and tomorrow is still the tail end of the Santa Claus rally. It's the 5 day, five last trading days before Christmas, the two after the New Year's. But it doesn't seem to happen right now.
1.4% is the average. And yes, with averages, there are going to be years of outperformance with the Santa Claus rally, sometimes with underperformance. But we still have today's trading session and tomorrow, so we'll just have to see.
Yeah. So what do you expect this week? What do you expect this quarter? Let's maybe start with this week. Take a look at the economic calendar to see where we are, what's happening.
Yeah, and here we see some of those red flag reports popping up on Wednesday. So ISM manufacturing PMI, JOLTS job openings, also the Fed minute. So recapping what took place at the last 2-day policy meeting for the Fed there. So those are all some things that could move the market.
Yeah, I think the big one this week is definitely the jobs report that's being released on
Yep.
Friday. That will be December's jobs report, because we know that the Fed said, or Powell said, you know what? We believe that the jobs market is still too strong. I mean, it said the unemployment rate is at 3.7%. That's the lowest since, I don't know, in 25 years or in 40 years. I don't even remember, but it's super low. And this is where Powell actually wants to see this tick a little bit higher. So we'll see. And that's where he said, yeah, we have the JOLTS jobs opening report. That's usually giving us a glimpse of what to expect on Friday. And that's being released tomorrow at 10 a.m., 30 minutes into trading. So that definitely could move the markets.
Sure. So Wednesday, Friday, busy days, and we'll just see if it creates some volatility and if we see some major reactions or if it will be muted. But it could be an interesting week as we kick off the new year.
Yeah, and then also the meeting minutes. We talked about it this morning with our mastermind members. I mean, when we have the Fed meeting, it's a 2 day meeting, and so at the end of the meeting, the Fed just says what they are doing, and they did it a few weeks ago, that they raised interest rates by half percentage point, and they have a brief explanation why that is. And then Jerome Powell usually grabs the mic and has a press conference. But this year in the meeting minutes, we will learn more of what everybody else is thinking. I mean, the FOMC is the Federal Open Market Committee. So there's more people than just Powell. It's not Powell can decide, oh, I'm raising interest rates. I mean, although we always blame Powell because he's the chairman, but we want to know, okay, what do the other Fed members think? And this is where sometimes it's very revealing, because sometimes it seems, oh yeah, they're all on the same page. And sometimes it feels that they are a little bit split. So this is definitely another event that could move the markets tomorrow.
It could.
All
It
right. So
very well could. And Marcus, you also mentioned the quarter, right? What do you think's going on this quarter? We talked about the big R word in our mastermind call this morning.
the recession. Well, okay. I like data. I'm not a big fan of opinion. I like data. And this were this morning I looked it up. So basically, you see, history shows the S&P rebounds after down years. And so CNBC has broken it down in 2018, where the S&P was down 6.2%. Next year, it was up 29% almost. In 2008, and that's right now what we are comparing the performance to, the S&P was down 38.5%. Next year, up 23%. So if you look back in history, it is very likely that we might see a rebound here, especially in the first quarter. I mean, we had some tax loss harvesting. This means that the big hedge funds have been selling losing positions in December, and now they're sitting on cash and need to buy in. So I believe this quarter, two things. First of all, earnings season is starting off in a couple of weeks, and we need to know, what do companies think? Last quarter, they didn't revise their guidance. And if they still don't revise the guidance, I think we might have a very strong first quarter. But it'll be a bumpy ride.
Yeah, and I saw a stat that said when the S&P is down more than 1%, the following year, on average, the S&P's up 15%, which outpaces historical gains too. So, I mean, to your point, typically when we have a rough year, the market does rebound.
Yeah.
So we'll just have to see. I believe that the first half of the year is going to be volatile. And whether we see a strong first quarter is yet to be seen. I think it all really comes down to earnings, like you said, and also just the Fed and what they're doing interest rate wise. Just because the Fed says they're going to, or they, based on the dot plot and what's expected, they expect to raise rates more than traders believe. Right. And so if traders win on this one and the Fed slows down and they start talking about slowing down or even cutting rates, that could be huge for the market. But I think we're going to see that at the second half of the year, not the first. So I think the first two quarters are going to be all over the place.
All right, so February 1st is the next meeting, and right now traders believe that the Fed will only raise interest rates by a quarter of a percentage point, 25 basis points. And so we see 70% of the 70% probability is factored into the markets right now, 30% of a half percentage point. But as you said, this is the dot plot. The Fed basically said that they see the terminal rate at 5.1%. Traders don't believe it, right? And this is where there's the saying, don't fight the Fed, but
Sure.
traders are fighting the Fed. They believe that we could see a decrease in interest rates as early as end of this year.
Yeah, and that's been fluctuating with the probabilities for a December cut or even a November cut. Right now, you see the December. Powell has said don't expect it in 2023, but we'll just have to see.
Yeah. So let's take a look at the markets today. So this morning, I mean, if you look at a 5 minute chart of the E-mini Nasdaq, we saw that hey, out of the gate, strong. We were opening 0.8% higher, moved up as much as 1% higher from last Friday, but then seems that everything is falling apart. I mean, now we are down 0.8%. So that's a pretty big swing that we are seeing here. Lots of volatility this morning.
It is, and I saw some headlines that attributed the drop to the manufacturing index with the market slipping when that was coming in at the fastest decline since May of 2020. But Marcus, put your mouse on the 10 a.m. bar. You'll see that the actually yeah, so a lot of that started to sell off before that low impact report. I think it was just a little optimism going into the new year, and then a gap fill as traders are still trying to figure out what the heck's going on this week with data and a light volume start to the year.
Yeah, and I honestly think it's being attributed to Tesla.
Oh,
I
there
mean,
you go.
Tesla right now down almost 12% because
Yep.
Tesla announced their quarterly deliveries, and they say, okay, they had 1.31 million deliveries in 2022. So they also reported 405,000 vehicles in production in the fourth quarter, and that actually is a growth of 40%, but less than expected.
Yeah. That's
Well,
a. I mean,
plus, the other thing is, this is where some companies say, well, Tesla had actually a fire sale towards the end of the year, at least in China. So it seems that they're producing a lot of cars, but the demand is no longer there for years and years and years and years. If you ordered a Tesla, you had to wait for it. Right now, if you want a Tesla, you can get it right away. And that's not good. So this is why this morning, analysts were quite disappointed with this. Even though there's a growth of 40% over last year, they say, well, Tesla's growth is slowing down. And this is why Tesla just keeps struggling. I mean, JP Morgan revised their target for Tesla to 125. So that's not good. And I mean, I saw another analyst says it'll be $23. Like,
oh.
what?
I think that might be a clickable event or guess there on that one, but nonetheless, Tesla getting hammered. Another contributor to the S&P and a reason why we're dipping now is Apple too.
Yeah, Apple also this morning. I mean, they're down almost 4%. That is a pretty big slide for Apple. And you see, they just opened, they didn't follow the typical pattern. They open and immediately start sliding, making session lows right now. So both Tesla and Apple, I mean, they are heavyweights in both the S&P 500 and the Nasdaq. So they're pulling these indices down right now.
Yep.
All right, let's take a look at our positions. And actually, let's talk about Apple for a moment before we look at our positions, because Apple popped up this morning on the scanner. And I must say, that's actually quite interesting. If you're looking at Apple, so right now, a minimum strike of 118. So I think that's very interesting to sell Apple puts at 118. What do you think?
Yeah, I see that there is some longer term support there. Those lows that seem to hold up going back to 2020, and some recent support that has been broken. So we are making lows based on the chart that we see recently. But still, Apple's a solid company. This dip, there were some rumors or there was news that they are cutting production due to weak demand, so that's contributing to this slide. But all in all, I think Apple's going to be a decent pick here around 117, 118, 119.
I definitely would be more interested in Apple than Tesla. But I mean, with the slide
Oh,
this
sure.
morning, we had quite a few opportunities pop up. I mean, Apple, if you're not in semiconductors, NXPI sounds
Sure.
interesting. We also talked about Oxy, but all of these three, based on our portfolio right now, would not make sense, because if you're looking at Apple and we are looking at the asset correlation, we are already in Google, Nvidia, CTRA, and Apple has a super high correlation to Google and Nvidia. So this way we would be basically tripling down on tech stocks, and we don't want to overexpose our portfolio one way or another.
Absolutely. But hey, Marcus, you mentioned it. We've been actually discouraging or just saying that we have concerns about Tesla for months now.
Oh my
I
God.
definitely think Apple's a better pick here.
Yeah, absolutely. Anyhow, quite a few stocks popping up. Let's take a look at our positions here. So CTRA, that's a position that we went in a couple of weeks ago.
Yeah.
So we have a new function right now in PowerX Optimizer that with the trading log, automatically I was drawing these lines manually, but we see I was assigned at 26, so that's my cost basis here, and my break even is at 24.86. So we see these two lines right here. So right now, trading below the break even at 23.77. So right now, we cannot sell any calls against this, but we were able to do that last week.
Yeah, got some decent premium there in the slow week. Right now, crude oil down over 2%. So that's really driving the oil and gas plays lower right now.
Yeah. But by the way, before we continue here, is this helpful at all as we are talking about the markets overall and then show you specific trades here? If it is, give us a like. Do that really quick, and then we appreciate it and can continue to take a look at some of the others. Google is bucking the trend here this morning.
In.
So Google for me, let me just go on auto. My cost base is 108, my break even at 104.28. So right now, not able to sell calls. Yours is a little bit lower, but we have to wait until Google probably pops up to around 100 before we can start selling calls again.
Yeah, for me, that would be my guess.
Yeah. And then Nvidia, the Nvidia saga. I mean, my cost basis here is 160.91, and I've been able to just collect a lot in premium on Nvidia. So my break even is at 137.25. So right now we're still trading above my break even, but I mean, we need to move a little bit higher before I can sell calls again. Right now, I'm most interested in selling the 65 calls, the 165.
I like that, and you should have got called away.
No. I'm going to milk this a little bit more. And so if you just look at what can we get here for the 165 calls, earlier today there were 30 cents available. Right now it's 5 over 6 cents. So we need Nvidia to pop a little bit more. But I'm fine holding Nvidia, and I do not need to get called away. I know that you're more conservative, that you would have probably gotten called away. I do believe. I mean, for 2022, Nvidia was my most profitable trade. Let me
Yeah.
just jump over there. So Nvidia, I have been able to collect, let's see, $26,000 in premium on Nvidia. So I'm not done with this one yet. I'm not done with this one yet.
Yeah, I think we're gonna. There. Some people are saying that semis can pick up, and honestly, this is what we see sometimes with good quality stocks too. Is that if there is a down year, the next year there's a rebound, right? And some outperformers have a tendency to pull back a little bit after a strong up year as well. So I think we're going to be just fine here. The 160, 165 range. I love Nvidia getting back up there. Getting back up to 175, 180, 185. I don't know, Marcus, but 165, I like that as a line in the sand. And we were at about 27% annualized this morning before it pulled back.
Yeah, and again, it looked good. Today, Nvidia was up 2.5%, now down 2.5%. So pretty large swings, and we see that there's
Sure.
a lot of volatility in Nvidia, which is great for us as option sellers because
Sure.
high volatility actually helps when we're helps premium, so we can collect more premium, and that's what we are looking for. Talking about volatility, I mean, this morning the VIX, that was actually super interesting to me. The markets opened higher and the VIX was higher. So this just shows that for this week, there's still a lot of uncertainty. Traders are saying, what the heck is going on? But we also see right now the VIX is not really spiking, even though the Nasdaq is right now making session lows.
Yeah, VIX was up about 6% when the markets were positive, and we've had a big reversal, and it's up another 2% there. But that just shows, like you said, that traders are pricing in more volatility now that we've began the new year.
Yeah. Anyhow, so today, a great day. Quite a few stocks popping up that are interesting. Unfortunately, all in the same industry as some stocks that we already own. So therefore, no puts to sell right now. We still have the 3 positions on. And this is where we will see if maybe after the JOLTS jobs report tomorrow, we might see a pop. Because if it comes in worse than expected, or let's actually take a look at the economic calendar. So if it comes in around 10 million or maybe even below 10 million, we might see a pop because that's what Powell said. That's what they want to see. So that we actually might see that maybe there is some decrease in interest rates towards the end of the year. We shall see. Hey, always trade what you see, not what you think. And especially about selling covered calls here, we have a video that we did. I'll link to it right here. So take a look at these videos, check it out, and then we'll see you again tomorrow morning. Have a great rest of your day.
Happy trading, everybody.